Hi, and welcome back to Break Free Basics, where we try to simplify self-directed retirement investing. Today's topic is something that I'm not sure a lot of investors think about until after the investment is made and the capital is deployed. And that is what happens when you want to sell. What happens to those funds? Are you free to use those funds? And is that the end of your self-directed retirement account? So if you've ever had those questions and the part of what happens after the fact has made you hesitant about signing up for a self-directed IRA or solo 401k, hopefully this video helps you and will help clear some things up. So let's go ahead and dive on in. The most important concept when it comes to this is when you buy an asset, it's never owned by you personally. It's always owned by the IRA LLC or the IRA trust, depending on what you sign up. That means when the investment is sold, it needs to come back into the IRA-owned LLC or trust, not you personally. Anytime you sign for one of these investments, it's either going to be as a manager if it's an LLC or trustee if it's a trust. So never sign for you personally. That's going to be one of the biggest mistakes that we see is people get excited or aren't thinking about this needs to be within the IRA still and signing as them personally, which is going to cause just a huge mess later. So don't do that. Manager for LLC, trustee if it's a trust. Let's go ahead and take a look at a couple common examples that we see. First one's going to be rental property. So you buy a rental property, you send everything out, and you sign as the manager of the LLC. The monthly rent payments that are coming in for that rental property cannot go to your personal checking account, right? Because it's for the IRA. So it has to go into the LLC checking account that is owned by the IRA. Just like those monthly rent payments, 10, 15 years down the road, you want to sell the property, those funds need to come into the IRA LLC checking account to keep it within the structure, make sure everything's still compliant. Another common one that we see is private loan. It's going to be the exact same concept, right? Those monthly principal plus interest payments need to go into the checking account that's set up through the IRA LLC. And then if they pay it off one lump sum, same thing, has to go into that account. Never, never, ever have it go into your personal account. That's going to be a huge mistake. The IRS is going to come after you. It's never just going to be a slap on the wrist. Always make sure it goes into the proper account and that you're signing properly. Now, let's say you sell the property, the loan's paid off, everything's good. You've done everything correctly. Now you have the funds sitting in the checking account. What now? Is your plan over with? Do you have to move it back to a normal IRA, standard brokerage, anything like that? The answer is no. Those funds are now in the IRA, LLC, trust, and you can fully deploy them however you'd like, right? As long as it's not prohibited transaction. So if you want to buy another rental property, do another loan, perfectly fine. If you want to explore different assets, farmland, precious metals, syndications, anything like that, you are free to make those investments as well. You're not stuck in one place. So as long as those funds are sitting within the checking that's owned by the IRA LLC, you're good to make investments however you like. So just because the asset's sold doesn't mean that you are stuck and you have to move back to a brokerage or anything like that. You can just kind of keep it rolling. And that's, what a lot of successful investors do is always have that kind of capital deployed in different assets. That way, it's not just kind of sitting around and you're always focusing on that next deal and making sure that your retirement is growing to its maximum capacity. So key takeaways, always sign as either the manager or trustee, depending on what type of account you have. Never have it go into your personal account. And once those funds are back, pick your next investment, diversify even more if you want to. Really, the world is yours with these types of accounts. So don't let the aftermath of what happens when you sell the investment deter you from opening these accounts. I think alternative assets is something that everybody should be involved in. So if you found this helpful, follow us on Facebook, Instagram, where you can learn more. We have a full form podcast, Break Free from Wall Street, where our host Nick talks to different industry professionals to find out how people are using these accounts and what they invest in real world situations. And as always, if you want to do a full deep dive, go to IRA123.com. Where we have articles, tools, videos, really anything that you could possibly use, different learning styles. We have it for you. So go to IRA123.com, learn more, call us. We are happy to talk to you, walk you through how these plans work. Thank you. This has been Break Free Basics. I am your host, Travis, and I will see you all next week.